Hello guys, and it's the end of the month time where we have a look at my Trading 212 portfolio and how it's fared for the month of January. If you don't know who I am and haven't seen this channel before, I am working dad trader. This channel is all about working class people, parents like myself, who are trying to get better with themselves, get a financially better future, and we're just trying to work towards getting to our goal where we can start worrying about money so much. In my channel I do try and show that it is possible to invest in the stock market and do well in the stock market. It's not easy, guys, at all. It takes a lot of patience. It takes a lot of just being sensible, especially in January. A lot's happened in January. It's been a really bad negative month. There's been a lot of negative news out there and a lot of scaremongering. We are in a rough time, but this is where we have to be patient, and if we can hold our nerve, and this is how we do well. And I've been doing this Trading 212 portfolio series now for a long time, just to try and show you my thoughts sometimes on the stock market and how I pick stocks, etc. It's not my main portfolio. I have a separate portfolio, but this one's just so that a bit of fun. I try and keep it around the 1,000, 1,500 mark, just so it's a bit of money, and I'm trying to sort of show different ideas and where the good things and bad things and where things have gone wrong, etc. So you can all learn and we can all learn together. So let's get on with it and look at Trading 212. Before we look at my Trading 212 portfolio, I wanted to show you some charts, so just so we can get an overall feel of what's been happening in the stock market. And this chart from Bloomberg is really quite interesting. It shows since 1930 the first 16 days, and you can see from the chart that this January, the first 16 days, has been the worst since 1930. Okay, then if we move on to the S&P 500, as we can see at the moment, as of the end of this week, Friday, it is 8% down from its highs when it was near the start of the month in January. At its highest point, it's 8% down. As we can see from the daily candles, at one point it went down a lot lower than 8%. It went down to about 11-12% down, which is quite a big drop from its highs. It's not a bear market just yet, mind, so before people start panicking and start using that word, we're not near the end. Remember, it has to go below 20% drop to become a bear market, so keep that in mind. At the minute, it's just a massive correction, which is sometimes really healthy for the stock market, and it does this quite a lot throughout the year. Last year we only had minor little corrections of about 5-7%, but this is quite a big one straight away. Some people argue that it's overdue, but as we see on the daily charts, at one point it crashed below the 200 moving average, which is the yellow line on the chart. But as we close Friday, it's back up to the 200 moving average line. So I don't know if that could be significant for the weeks going forward, whether it's found support at that line and then we might go back up. Who knows? With the stock market, it could go down further again. But also, if we take a bigger picture and look further out, so we use the weekly charts, look at the weekly candles of the S&P 500, we can see it's been moving in an upward trend for quite a while, and it's been way above the 50 moving average, but it's been, in the weekly candles, it's found support at the 50 moving average. So whether that's a support level for that, I'm not sure. So we shall see as we go forward. And then we move on to the Nasdaq. The Nasdaq's took a lot harder hit. At the moment, as of Friday, like I said, the Nasdaq's about 13% down from its highs in the start of the month of January. It's been a lot lower than that. It's been a good 15% down at one point in the month. It really has. The tech stocks and stuff, heavily tech stocks, have took a real hit. And there's been a lot of downward pressure on a lot of those stocks. Lots of people would argue some of the stocks within the Nasdaq have been way overhyped and way overpriced for a while, and this bubble has burst. There's still a lot of great value in the tech stocks, definitely. There's still some great companies that I'm quite happy still to be invested in, and I believe they're still going quite cheap, but there has been lots and lots of way overhyped stocks out there at the moment which are way overpriced. As we can see on the daily candles, it's crashed way below the 200 moving average. It's gone way below that, so it does look not so great. And as you can see, the moving average is on a slant down, which is quite a negative sign for a stock or an index And when we're looking at the moving averages, they're on a sloping downward curve, which is not good for the minute. And we take a wider picture of what's happening on the charts and look also at the weekly candles just to see what's going on in a longer perspective. We can see it's for a long time it's bounced along the green line, which is only a 20 moving average. It's bounced along there, the 20 moving average for the weekly candles for a long time, but it's crashed way below the 50 moving average. So at the minute the Nasdaq is not looking too great. So that is in quite a bad shape at the moment, and we see what happens in the next week as we go forward. So now we get on to my trading 212 portfolio. From the start of the year, literally from the start of January, I made some massive changes for the start of the new year. I got rid of a lot of stocks. I took money out of this portfolio and moved it into my main portfolio. So I've kept it at around 1,400 sort of mark. And I've cut down a lot of the stocks that I didn't believe that I wanted to hold for the long-term future. I've also got, thought this year I'd try a new experiment, which I'll go on to in a minute. But for the minute, my portfolio is minus 9%. Obviously, everyone's portfolios have been getting hit hard lately. Mine is 9% down at the moment. As we go down through the portfolio, again, my Chinese stocks are still weighing down on my portfolio. This has been an ongoing thing back in 2021, and it's still an ongoing process now. They're both Alibaba and Tencent are having a heavy drag down on my portfolio. One of the other ones is Games Workshop, which is only it did so well for most of 2021, and come the end of 2021, leading up to Christmas, it had quite a bit of a nosedive with lots of different things going on with supply issues and costs of supplies. Had a bit of a falling out a lot with its customers as well for certain issues, and it's taken a bit of a drop. I think the costs of them getting the goods and stuff's had a bit of an effect on their overall growth. But when they released their financial figures not long ago, it was fairly positive. They still beat all their profits, but their cost of sales was a lot higher than expected. And I think that's part of the reason why it's had a negative effect. But the company still finished in a profit, which is good. And it's always been in profit for a long time. So I'm still quite happy to hold that stock, because I think once we get the cost situation sorted out, then it's got a good future. The other one is Salesforce. Again, that's taking a battering lately, and that's dragging my portfolio down. There's a few still good stocks in there. Obviously, American Express has obviously been a fantastic buy for me. Things like Meta is doing reasonably well, Costco, etc. So that's generally my portfolio. The thing that I decided to do this year, after reading a lot of stuff that Ray Dalio's done, and I've done previous videos on Ray Dalio and the all-weather portfolio, I thought it'd be really quite a good, interesting experiment, because I really did believe going into this year that it's going to be a really turbulent year again, and funny enough, it's proved that way already. It's been quite a really horrible start to the year. So I thought it'd be a really good experiment just to sort of have about £150 in an all-weather portfolio that I've tried to mirror as close as I possibly can with using sort of UK version stocks of what Ray Dalio suggests. I've got the percentages right, and I've tried to pick the ETFs to match what he wanted and how the money he wanted to go into, with obviously bonds, long-term bonds, stocks, gold and commodities. So this is what I've designed, picking out ETFs to sort of get as close as I could to this. I think it's going to be a really interesting experiment to run through the year to see how it fares. As you can see at the moment, it's only about 3% down, which, considering all, and I started this at the start of January, so it's got a fair start to the rest of what's happening this year. I think it's doing quite well, only 3% down. There are a lot of stuff in it, if we can go down through. The all-weather Vanguard FTSE all-world ETF is -6, which that holds a little bit of my the pie that I designed. That's 6% down. But then you look at the Invesco Bloomberg Commodity ETF, which is all the commodities, things like oil and stuff, which has been doing really well, oil, gas. That's at +7%. So it's sort of balancing it out, and I think that is generally the point of this all-weather portfolio. Under all these different conditions, that it shouldn't fare too badly in all these different things that are going on. So it's going to be an interesting how the year develops, because obviously we're down now, but at some point the stock market will bounce back up again, because that's what it does. So it'd be interesting to see throughout the year how this all-weather portfolio, only a small amount of money, just an experiment, just to see how it fares against the S&P 500, etc., my own portfolio, and just see whereabouts it sits and whether it be a useful tool, especially as you get closer to retirement and you don't want to risk massive amounts of money, then see, like at the minute, a 12% drop, etc. If you're about to retire and your portfolio just dropped 12% this month, you might be a bit upset, especially if you're going to retire next month. So this is why I'm doing it. It's going to be an interesting experiment just to have a look and see how it fares. Okay, so I'm Working Dad Trader, and I hope you really enjoyed looking at my Trading 2-1 portfolio. Remember to hit the like button, and to see more of my videos, then make sure you subscribe. It's really important. It helps the channel, and it helps this channel get out to more people, and to hopefully help more people like myself, a working parent who works a lot of hours, works all week, trying to balance the books, trying to balance the bills, trying to keep a roof over my family's head. I'm sure you can all relate to this. So, like I say, help me support this channel, and let's get this out there and just try and get more working class people, more hard working parents, get better financial futures for themselves and all their families. Okay, thanks for watching. See you soon.